Hello, welcome back to the weekly video. Thank you for viewing this week's video. I am going to, as usual, going to cover what has happened last week and then what to look out for going forward. So let's take a look at the chart right now with the starting with the Dow. What you are looking at the Dow was that last week I was anticipating a potential double bottom formation. And we had the Dow hitting the resistance over here, which is very encouraging because it forms the double bottom formation. It's good and bad. I'm going to share with you. The good news is the Dow has a double bottom formation. It got resisted on Friday, did not break out successfully as it opened higher, closed lower. But nevertheless, next week we hope to see a breakout. As the banks reported good results, we wanted a more bullish momentum to come in. If a breakout happens, then we have a projected level at around 32,240 if the rebound is successful. This is happen to be near to the resistance over here. Okay, now if you look at the channel, downtrend channel, the Dow is above the downtrend channel, which is good. So this is a good news. Unfortunately, the bad news is that S&P 500 did not manage to clear its downtrend channel and did not form its double bottom formation. It will be great if all the three indices form their double bottom formation. So what we are looking at is that the S&P 500 is back into its downtrend channel after briefly bridging it. And then most of the time you can see that it tried to cross above, but it got whipped back in. So it will be a do and a die for the S&P 500 or the US Dow, because the Dow is apparently is the only index that has the double bottom. If you look at Nasdaq doesn't have as well. Nasdaq is also back into its channel after briefly breaking above the channel. We saw it came back down, so it is still overall bearish. But the good news is that if Monday we see a rebound back above the channel, then we may see some ray of light. The Asia market, STI has been back. You can see STI broken its major support level, which is very bearish, and we have to go back to as far back as last December to see that actually STI rested at the major support level or key support level at 3041. If this support level cannot hold, it's a major because it got tested once, twice, in fact 3 times. Yeah. So if it cannot hold, then the next level of support is 3025. And if can't, then 3025 is actually a very important support. You can see here was a previous resistance turn support, supported many times over here, which is quite key. So if we can't hold, then wow, this year could be a tough year for STI as well. So 2879 will be a next major support. In between, there's still a minor support at around 2947, which was a previous resistance, could be turning into support over here. So there's no sign for STI to rebound as yet. Downtrend is still very much intact. Let's draw a channel over here. Parallel lines. If I were to draw a channel over here, we can see STI is inside the channel. You can see the lows over here nicely. So if there's a bounce over here towards this upper trend line, then a breakout from there, then we see some trend reversal coming in. Hang Seng last week, you can see my projection over here accurately hitting 10%. So somebody asked me why I put 10%. So I just took the in between 7% and 13% and just come out with a 10%. I must say it's just a hunch lah. So it hit that 10% and rested at the 10% level. It was an inverted hammer on Friday. It was a nice white candle, but ended lower again. So because the Dow, the US market had a heavy sell off on Friday night, so Hang Seng likely at Monday opening should be gapping down below this 10% and go beyond. So if it's further down, then 13% could be around 15,772. Now, if suddenly you see a higher opening, then market could be aging for a bottom. So would there be a chance for the market to recover? Of course, overall, you can see that it's quite bearish, and what we are staring at is higher interest rate. But the bank's result were good, and next week there will be more bank result like Bank of America, and then Tesla. Netflix is one of the key indicator as well, because they lead they are first to announce results, so that's why they will be an indicator for the online TV program provider to see whether they are slowing down or they are picking up. So the bank's Goldman Sachs is going for result as well, so likely to be good, as most of the banks are good, except that they are raising their debt, their bad debt numbers because of the potential recession coming. Then we have Tesla on Wednesday after market close. The thing is that on Friday we can see all the EVs got now whacked left, right, down, and then we saw that the tax are going down as well. We're going down. So we have Tesla, and then IBM is coming out with result. So what are the key economic data to look out for? On the Monday we have PMI, then we have GDP. Now we need bad market data, because when all these data are bad, economic data are bad, the Fed may pause their rate hike or reduce their rate hike. But well, that's the thing that we need to watch. GDP numbers on Thursday and PCE prices, right? These are the numbers that may impact the market movement, whether can the market successfully form a bottom. Okay, so we have good corporate result but bad GDP numbers. Okay, so that is what we are looking for market bottom. But for those who shorted the market, well, so far the market is still bearish. Probably you might be riding the trend down. That's very normal. Okay, in fact, even if the market were to bounce up, forming a bottom, it won't be a long-term uptrend. It could be just a quick bounce, and then we'll take a look at how the rest of the inflation numbers will pan out, because the September numbers are still high. So October, whether you will come down or not, remain unknown. But we know that the war is still going on. And okay, very importantly, 8th of November, we have the midterm elections. And I think Biden is preparing for his losses. Okay, so let's see how's the outcome. Okay, so thank you for viewing this week's video. I will see you again.